What's driving markets? Welcome to Market Take. Each week, we'll bring you our insights on the latest market and economic trends that are impacting investments. I'm your host, Nicholas Fawcett, an economist in the BlackRock Investment Institute. And this week, I'd like to discuss the future of finance, one mega force we see shaping returns now and in the future, and how it's playing out in the US financial sector. Higher interest rates have brought back competition for bank deposits. The rate US banks pay on deposits has lagged other parts of the financial system, such as money market funds. Savers have moved cash there as a result. The Fed has injected $4 trillion into the economy since 2020, yet the banking system only has half that in additional deposits over and above the loans it's made. Still a comfortable buffer for now, but likely to run down as the Fed's quantitative tightening progresses. The rest is in rising money market fund holdings. In a more competitive market, we expect to see banks paying higher interest rates to savers. That likely means higher interest rates on bank loans, which would crimp loan demand. Less lending and paying more for deposits will squeeze bank profitability. Banks could choose not to pass on the extra cost of their deposits to borrowers. That would hurt their profit margins even more, worsening the squeeze on the value of loans made out. Reduced bank lending is bolstering a longer-term trend in the US financial landscape. Companies have been diversifying funding towards non-bank sources, and we think that trend will persist. Private credit, in particular, could be appealing for smaller firms that face high barriers of entry in public markets. Greater diversification of funding is good for borrowers, and higher rates benefit savers in our view. The higher interest rate environment also has broadened out the potential ways of making income, and we see opportunities in alternative funding sources like private credit. For more details, read our weekly market commentary. Go to www.blackrock.com/weekly-commentary. And thank you for tuning in. If you've enjoyed this episode, subscribe to Market Take wherever you get your podcasts.
This material is intended for informational purposes only and does not constitute investment advice, a recommendation, or an offer or solicitation to purchase or sell any securities, funds, or strategies to any person in any jurisdiction in which an offer, solicitation, purchase, or sale would be unlawful under the securities laws of such jurisdiction. The opinions expressed are as of the date of publication and are subject to change without notice. Reliance upon information in this material is at the sole discretion of the listener. Investing involves risks. BlackRock does and may seek to do business with companies covered in this podcast. As a result, listeners should be aware that the firm may have a conflict of interest that could affect the objectivity of this podcast. For more information, visit blackrock.com